Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Tuesday, December 13th, 2022. It was a very interesting day, to say the least. The CPI number did come out this morning, and it actually came out better than expected. Came out at just below expectations were for it to come out at 0.3%. And it came out at 0.2%, which kind of dropped the inflation rate to 7.1%. Well, that did send our markets up through the roof, where the NASDAQ was up, I think, 400 or so. The Dow was up 700 or 800. The S&P was cruising, got up to, I think, 4182. And then it started to come apart. And slowly but surely, the Dow turned negative. The NASDAQ got down to being up maybe 4. And Apple, from being up over or just below 150, dropped to 144, where we saw Microsoft up 11, came all the way back down to being only up for 440, et cetera, et cetera. And Tesla actually starting the day up and then ended down and then finished the day lower. So there was a complete turn of events here. And I think that may have caught some people by surprise. Nonetheless, if we start by taking a look here at the daily chart, believe it or not, I have not shifted over to any of the alternate views. I am continuing to view this as a second wave, an intermediate wave 2. And what I did do is I made a quick adjustment to this small count right here. If you remember, I had the X here, and then I had an ABC up to here. And that I was willing to put there. But then this would have been minute wave 1, and then we were working on minute wave 2. That had, of course, be switched because of today's strength and exceeding that high. But I had been presenting the possibility that this, because it was 5 waves up, could have been an A wave. Indeed, if this was the X, then this would be A, we do a B, and we get a C. I'm going to drop down to I first want to check something, because I think what I did is I'm putting this, for the whole thing, I need to take those fibs off, because right now they're still out there, but they're not as important right now, simply because we ran up, we came down, all below that trend line. It's a very interesting day to see the market turn itself around with the knowledge, right? Because we all know that tomorrow the Fed's going to give us their decision. Their decision, do you pivot? Do you only raise 50 basis points? Or do you come in at 75 basis points? Or do you not raise it all? Again, a lot of things flowing around as to what could possibly be going on. So right now, the street and everybody's under the belief that the Fed will only raise a half of a basis point, or not a half a percentage point, excuse me. And I'm like, we did not hear that that was going to be the case. We heard we could consider it, but because of the CPI number and the other numbers that we've received, the street's like, oh yeah, for sure, that's what they're going to do because they said so. No, they didn't. So I think we could get a little bit of a surprise tomorrow. I'm just saying we may be. And so the reaction coming off was because everybody got a chance to go in and look and see what the CPI really is. Now, remember that the Fed's goal is to bring inflation, to control it down to 2%. That's their goal. Well, if they've raised it this much and they're still above 7%, yes, it's come down from 8, but we've raised interest rates 3 percentage points over the last several months. And still, we're not truly getting a hold of inflation. Now, granted that the market is so hungry for positive, so hungry to, everybody keeps asking me, are we at the bottom? Are we reached the bottom? When we're going to get to the bottom? And it's like, folks, it takes time for all of this to work itself out. It doesn't happen overnight. The Fed's not going to stop simply because we've got 2 months of a little bit of a correction to inflation where it's coming down a little bit against how much we have raised, or how much the Fed has raised those rates. And again, if we just take a look at the short end of the curve, and I'm talking about T-bills, the 4-week, the 8-week, the 13-week, the 26-week, all the way out to the 52-week, every single auction, they auction higher. The interest rates go up. Now, we have seen a big move coming into the long end of the curve, the 30-year, the 10-year, the 5-year notes, even in the 2-year note, but not as much. The 2-year note's still above 4%. The 5 is just under 4%. The 10-year, 3.5%, but that was the goal. The 30 still sitting above. It may work its way down to 3.5, but that seems to be the target where they're going to hold that long bond, 3.5%. So I think when people are such hungry for something that's going to tell them, yeah, we're okay, everything's going to be fine, we're all going to live. The point is, we are all going to live, but what do we need to get through first? Now, my age and how I have been through periods of recession. I have been through periods of high inflation. I was trading in 1981. I was there. I did witness. I did see what went on. And yes, there are differences between 1981 and 2022. But it's the inflation, folks, really comes from because the government, and they had to, realistically, they had to bail out corporate in 2009. If you were around then, you saw Lehman Brothers close the doors. Bear Stearns closed the doors. Several small banks lose it. Merrill Lynch almost went out of business. But then they got picked up by Bank of America. So what happened is, like, all these big banks, too big to fail, need to be bailed out. And then we need to bail out even more. So it was a lot of money that went out for that. And granted, some of it was all supposed to come back, but still the government printed money and injected it into the system to stop the collapse of our financial system and to start to put it back into gear to go up. And it did. Then we got COVID. And then the COVID slide. And the only thing we could do here in this country is to shut it down. Stop mingling, stop getting people from going to work. Now they got to go isolate in their homes. And so the government had to bail out the public, us, the retail. And then that happened, and that injected trillions of dollars into the system so that we all could keep going. And then conversely, so some went into corporate that they could keep functioning and pay their employees. So that is what is inflationary. That is what is creating the mess we're in. There is still a great, huge amount of money zipping around in these markets. So what the Fed's goal's got to be is to bring that inflation down to 2%. My guess is they're going to raise that goal. I think they're going to raise it to 3%, and we're going to hear about that next year, in my opinion. Now, even if they do that, what's got to go along with it is that we need a higher unemployment rate. So that's going to stop the wage inflation. It's going to stop that, bring that into control. So again, I think that the jobless claims from last Thursday, that's really what's going to, I think, be on the Fed's mind. Because we are seeing that people are going back to work. People are finding jobs. And even against the large number of layoffs that we've seen within the tech sector, with a lot of other sectors, with a lot of troubled areas, jobs, people are getting work. So that number has not actually gone in the direction it needs to for the Fed to really get a grip on inflation and say we've conquered. So again, I think when we take a look at the whole picture and we place it together without the hype, without the BS, without the pundits, we can see that the Fed may give us a break and do 50. Now, we're also hearing it's like, well, they're going to do 50 this month, 50 next year, and then finally down to 25. And it's like, that's wishful thinking. I really think so, because I find it to be a little bit a false narrative, because we don't know. How can we forecast out how all this is all going to turn around? There are things that can happen that can upset the apple cart all the way along. So again, this turnaround from racing up based on the CPI data being rejected speaks much louder than the run-up. So I'm cautiously not putting any additional labeling on here, because believe it or not, this could be 1, 2, 3, 1 of C, 2 of C, 3 of C, 4 of C, as nasty and as huge as it is in comparison. Stranger things, folks. So it may be the deal, and we go up one more time, and we actually do then get to 2. I need to run that from here. Yep, got it. So just to kind of put this into perspective, right? I'm going to do that. I'm going to put it up to the A wave, down to the bottom of the B wave. So if we're looking at the C wave, we got up to 1.618, almost. And that's what I would be expecting. And again, so let me just explain further. There's wave A. Wave B did come down and put in a new low below where wave A started. So in essence, I can almost consider this B wave as much as I want to count it as 5, it can count as 3. I know it's screwy, but it's like if you've done Elliott long enough, you'll understand. But if it's a B wave, and it could be an irregular B wave, that would suggest that the C wave should get us up to 1.618. That's the natural Fibonacci that you would associate with it. Well, we almost got there. So could wave 2 be over? Yeah, it could. And if it is, that's how I would expect it to start. This level was rejected big time. This high was 4180. We dropped 140 points off that high in the S&P. In the Dow, it dropped 800. In the NASDAQ, it dropped 400, or almost 400. Those are big turnarounds. And it was very just kind of walked its way back down. It was persistent, but it didn't. It's not like it was like the world was like at war and we're just selling. It was just just hit the bid, hit the bid, hit the bid, hit the bid. So it could be over, or we get one more chance at running it back up. Again, tomorrow at 2 o'clock Eastern, 11 o'clock out here on the Pacific Coast, the Fed gives us their decision from the latest meeting. And then at 2:30, we get to hear from Chairman Powell. So right now, you can see they're kind of just holding the market pretty steady. The S&P's up 25 cents, whip-de-doo, it's up a tick. And with the NASDAQ's kind of like right around unchanged, a little bit lower, a little bit higher. And I think it'll remain that way until we come back in tomorrow, and then we'll see how all the adjustments want to be made and what people really want to think. Now, on the heels of this, we have an expiration, a quadruple expiration on Friday. We've got so much going on that has going to have an effect on volatility, on prices, on everything under the sun. Hopefully, it's going to create some really good trading opportunities. And again, as you know, and I repeat myself, I am a day trader, so I can go with the flow. And today was, I think at one point I was getting a little bit wrong-footed, and I think, well, we should be going back up, and they kept hitting. So I was down as what some people would say, down ugly. And because there was enough trading, it took 20 minutes or so, but I got all the money back and ended up in the green and then built on that. So that's also my point. It's like we have enough opportunity within the products that we're trading, particularly the S&P and the NASDAQ, where you can take a hit, get back on there and keep trading, and you will earn your money back. And as I said yesterday, don't fight the market. If it's going to race up and keep going, don't. You want to join the party. You don't want to leave it. Or you don't want to start shorting it and watch it go in your face. Same thing here. Thinking, oh, they're going to turn it, they're going to turn it, they're going to turn it. And so you get to a point, take your hit, but then get back on and realize, nope, they're not, and they're going to go down. So you can make your money and then some. That's my point. So here for the S&P. Here we go. Looks like we're getting a little bit of a triangle right here. Really little bit of a triangle. Last time I thought we were in a triangle, it blasted higher. That was right here. I thought they'd go lower. It did, stopped, and then ran. Could be the same thing. We get it, it stops, and then we run. So again, because in this position, I would think we normally get the triangles after this in a fourth wave position. But this would be a big fourth wave. So, and this triangle, it doesn't make sense. But I still think it's a triangle. And I'm not even sure because of its position of where it's like, if this is the A, the B, the C, the D, the E, it should still resolve down, but I'm not sure. That's A, B, C, D, E, still should resolve down. So we'll see. But then after that, then we're going to be looking for a rally because again, I'm not sure how to count this or what label to put on it. If we got 2 and then 3, 4, and 5 all within here, well, then great. Because if this is all going to be part of it, and we've got a 4 and a 5 somewhere in there, then the 2 could be complete and we're working on a wave 1 down. And this could be 1, 2, 3, and a 4, and then we get a 5th wave down, and then we get another wave up. Pretty much exactly as we're sitting here. Thinking that's a 4, we're going to come down and then rally. Except we rallied and turned into a 1, then rallying and turning into a 2. But again, if this is finished in wave 2, intermediate wave 2, we're in that beginning stages again of this 3rd wave down. Now, I'm not calling it because we got this Fed. I don't know what the markets are going to react to or how they will react because I have no idea what the Fed is going to do. I know what they said, that they were going to be consistent and with 75 basis points. So we'll see. We will see. So be prepared for both. If we're going to rally back up, then we have these still in place. 4187, 4200. That's always kind of been there. All right. And then outside 200, that would put this whole C wave 200% of wave A. That's pretty huge. Now going out, I'm going to go back to that daily so you can see where it can't. If this is 1, it cannot go above 43.29. Excuse me, 43.27 to be exact, 43.27.50. Cannot. Then it cannot be a wave 2. But then we have the additional where that would slip over to here, and this would be in progress. Then we can go much higher. And I ran those fibs yesterday. We got 43, 44, 45. And it would run the potential of strong possibilities of actually going up here. Again, what's it going to take to get up there? A whole lot of fancy footwork in my mind, because we don't have that strong of evidence. But I'll tell you, algorithms and covering and all the rest of the stuff that's going on and what we want to do in particular stocks, et cetera, you never know. So number-wise, potential. Elliott-wise, potential. Fundamentally, far-fetched. But I do see we could get ourselves up here and then nosedive. We already did that and nosedive. So we'll see. We're going to move over to the NASDAQ. The NASDAQ, same story, folks. Interesting, wasn't it? Now, the NASDAQ, on the other hand, did not break its trend line. Now, remember, that is where I've connected the all-time high to the March high to the August high. And look at that. If you look at the weekly chart, boy, it got close. That high today was 12,339, and this was sitting at 12,372-ish or somewhere in there. Got close. And it was very strange because I do trade the NASDAQ. And so I was in there and I see 20, it was at 2339 and it just stayed there, just sit there, didn't move. I'm like, well, it's kind of, I can see that it's trading, but it's not registering. It was very, very strange. So I think there was a lot of activity, but it was very bizarre and how it was all being played out. In any case, same deal. I shifted, moved the X over, put the A there, the B here, and 1, 2. So I'm not putting the 3. I don't know. We're going to have to wait and see. The market will tell us, and I will then be able to go start digging in to see what's happening inside here. But we hit that, and there it is. Here's our opening. Down, 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 down. Then sideways. But the first 3 hours were down. It was pretty wild, I gotta say. Just to be there and witness the push up was like, get out of my way, and up it went. Then the slide down, wow, nobody was coming in to support that. So interesting. So again, we don't know. Potential is, I'm going to go back out to my daily chart and let's take a peek. And we want to, I can do that on my hourly. Sorry, I'm kind of moving it all around. We want to go here, which is the bottom of the start of wave A, up to the top of wave A, down to the bottom of that B wave. And you can see we got above, we got up there. But we have 1.382 at 12,366. Then we got that trend line at 12,444 right now. And then ultimately 1.618. Again, same deal. This is going to be irregular, right? The A, it comes down, puts a new low. Could be irregular B. That would be the calculation. Most often, well, first of all, this would need to come down 1.382, and it didn't even come close. It didn't even come down to 1.236 on the decline of that A wave. Nonetheless, it did put in a new low, which opens the door. For here, 12,366, then we got that trend line, and then we have 12,527. There's that magic number again. 12,500, 12,500. And as much as we want to get away from it, it keeps coming back, kind of like a bad whatever. In any case, leaving it all open for right now. Again, tomorrow we have the Fed. I don't think outside of that we have any economic numbers. Let me just double check. Import and export prices are at 8:30 a.m. Eastern, but they're on my service, they're green, which means not really a market mover. We have EIA for petroleum, for oil, or for crude. That's at 10:30 Eastern. It's going to affect crude than anything else. Then we have the FOMC announcement and the Fed chair press conference, and those are at 2 p.m. Eastern and 2:30 p.m. Eastern. So the big release of data will come on Thursday morning. Then we have jobless claims, Philly Fed, retail sales, and industrial production, plus some others, business inventories, Empire State, manufacturing, etc. Friday, quadruple witching, and then a PMI composite flash. Now, it's a big week. We are seeing the volatility. Volatility did close almost unchanged. Amazing, almost unchanged. Against rallying, dropping. But don't forget, the VIX is calculated against the SPX options. So not necessarily the speed, but the SPX options. What the volatility is, because you go put an equal sign there, volatility equals premium. So that's where we stand. Our moving averages, at least on the hourly chart, are still in pretty good shape. We got these hooking as they should. We got the 20 going flat. We got the 50 kind of, well, deciding, but the 200 is kind of like still angling higher, but getting flat, which kind of takes us that they're not looking like they really want to rally it more. But we'll see. We will see. We still have the Asian markets to go at what they think we did today. And then we have the European markets. Plus, don't forget, all these big banks in our country, they just roll positions and orders from New York to Hong Kong or Tokyo, and then over to London, and then back to New York. They just roll it around the globe. So they could be trading all night long for all we know. And if the market continues to come down and we get a little bit of surprise tomorrow, it'll go fast. It'll go very fast. It'll go faster than what this did, and it'll go just as fast as that went up. And I think it'll go even more harder, because the surprise to the downside is you're going to see all these people that are now long waiting for the pivot, waiting for all this great stuff to happen, waiting for inflation to disappear. It's like you're early and surprise. So this spoke volumes to me today about what we can wait and see about for tomorrow. Doesn't say for 1 minute, folks, that this could not just go from here, sit like this, maybe up a little bit, down a little bit, and then we get that number and it does one of those. We will wait and we will see. All right. That's where I'm going to leave it for right now. Again, don't forget, tomorrow we have the Fed, and that's going to be at 2:00 Eastern. There is, any of you are aware of Jim Rickards, who wrote a great book, The Death of Money. He is got his little crash clock going, and he puts the starting time for that clock on December the 14th at 2 p.m. Eastern. Guess what that is? We all know. All right. Have a great evening. First of all, thank you to the subscribers that wished me well on my test. Obviously, I'm still here. The test went fine. It was a stress test. I'm testing my heart. My heart's good. So no blockages, no nothing. That's just a quick update. Thank you all for your well wishes. I really appreciate it. And have a great training day tomorrow. And our next update will be on Wednesday, December the 14th.